Tom Lee is extremely bullish on the overall market, especially small cap. Take a quick look at this video of him explaining his reason why.
Joining me now is Fundstrat co-founder, managing partner, Tom Lee. Tom, good to have you back. Now, I know you're saying that the bottom is in for the market from that early August move. I'm still fixated on your expectations for small caps. I've been talking about them a bit in this hour through the rest of the year. You still think that they could go up 40% by year end?
Yes. John, for small caps to rise 40% means that the PE, the median Russell 2000 stock, goes from 10 times to 14 times. So it's not asking the market to provide some magic and a huge revaluation. It's actually just saying small cap stocks, which have been left for dead largely because the Fed's been tight for almost 2 years, as they start to normalize policy and as mergers pick up, its merger activity has been accelerating this year, and it should really strengthen because it's a sign of CEO confidence. All of these flow through to benefit small cap stocks, and it's not like smaller companies are growing slower. I know people post all these stats about small caps losing money. It's mainly because of the biotech components basically don't make money, and that's the largest cohort of stocks in the Russell. But the Russell 2000 median earnings growth is almost 700 basis points faster than the S&P, and top-line growth is almost 400 basis points. So you're getting better growth, lower valuation, and I think the catalyst is now when the market is convinced the Fed is embarking on a rate-cutting cycle.
Okay.
Could happen Friday.
Okay, so if a 40% upward move happens for, say, the Russell 2000, what happens for mega caps? What happens for the broader S&P 500? Do you expect them to have similarly dramatic moves, or is there a major rotation that you're expecting?
Well, John, we've already witnessed this happen in large caps. NVIDIA has risen 40% in 8 trading days. So when someone says the Russell 2000, which is made of even cheaper companies, can't rise 40% in the next 5 months, they're forgetting that we've already seen huge moves in the mega caps. I don't think the mega caps have to go down.
Do you expect it to happen in isolation with the small caps is what I'm getting? I know that NVIDIA has done that. Some other stocks have done that themselves. But if you're talking about all of the small, the small caps as an index moving up that much, what do these other things do?
Well, I think that a 40% move in small caps doesn't mean the rest of the market goes down. I just think that's going to highlight that the market is broadening, which is something we all expect, but it's also basically doing a risk-reward analysis, which is, look, I think if you can get 18% earnings growth and pay 10 times earnings, perhaps that's a good risk-reward. And I think money that's on the sidelines, or people who've been thinking bonds are going to be, and cash is a place you want to stick for the next 5 years, but if the Fed starts cutting, they're going to look for places where there's good risk-reward, and I think that's small caps.
Do you need dramatic cuts for that thesis to pan out? Or are there other potholes in the road that you see that threaten your thesis?
Well, a recession would be negative. I don't think the Fed has to make major cuts. It actually just has to. I think the market narrative that would be the best for small caps is the belief that real interest rates are too tight now, 5.5% versus inflation trending towards 2%. And getting rates back down to a neutral rate of 3%, if the market believes that, they don't need the cuts to be front-end loaded, but they have to believe we're going back towards neutral. I think that'd be a huge catalyst for small caps.
Okay, now let me ask you about more about mega caps and about the consumer. How important, not necessarily just to small caps, but to the whole market narrative, will NVIDIA earnings next week be?
Well, NVIDIA is really important because it's underpinning really what is driving the U.S. economy, which is a real push towards productivity, using basically digital tools and automation. That's a very important disinflationary trend. And of course, the U.S. companies, all of the big ones are all the U.S. I mean, it's a global phenomenon that benefits U.S. companies. So I think it's incredibly important. But NVIDIA, trading at 26 times forward earnings isn't that demanding a stock either. So it's not like I would say sell NVIDIA to buy small caps. I think NVIDIA is still a long-term buy.
I think the strategy here is to find the top 3 holdings in the Russell 2000 and see which one fit your investment risk, especially biotech. And then you can pick one you like, okay, I'll go long-term on this one. for the risk and see if I can do a small trade till year end and see if you capture some of that 40% from that individual stock, or you can actually play the whole sector. Another stock I want to cover is AMD. They have been making a big push to catch Nvidia. As a CEO, your job is to pivot and follow the trend in your industry, so I applaud Lisa Su for doing that. AMD agreed to pay $5 billion to buy ZT System, a designer of data center equipment for cloud computing and artificial intelligence. The deal was made to compete with Nvidia and acquire customers like Meta and Microsoft and more. And this is like their second acquisition in the span of like 2 months. So I really like that by the CEO going out there acquiring and making the company better and trying to compete with Nvidia, because at the end of the day, they definitely need to catch up. Please make sure to do your research and consult your financial advisor. Don't forget to like and subscribe to the channel and click on the link below for some free stocks from Moomoo and Weeble. Thank you for tuning in and see you next time, folks.